This is a clean price action chart. No fancy indicators. It's all about how skilled you are at reading price action. That's right, in this video, we are going clean. And I'm going to show you how to trade pure price action without complicated indicators, even if you are a beginner. By the end of this video, you will have a step-by-step blueprint to identify turning points in the market like a pro. Towards the end of this video, I will also show you the most common mistakes that most traders make when trading a pure price action trading strategy. This might be costing you thousands of dollars in losses, so you definitely want to stick around till the end. If that sounds good, go ahead and smack that like button and subscribe to this channel. I would appreciate that, and it helps this channel reach more traders like yourself. If you want to take part in our giveaway, check out the instructions in the pinned message under the comment section below. But in short, you need to look for an emoji that will appear somewhere in this video and comment what the emoji is plus win Forex signals. Now, this price action trading strategy relies on understanding momentum loss. I've seen many price action traders simply identify key levels and try to trade all of them. That's not wise, because price can approach your level with momentum and break through the level. If you trade like that, you will lose money. So obviously, just identifying key levels isn't sufficient, and we need to watch how price approaches the level. As price hits into an area of support or resistance, we need to see price losing momentum by looking at the candle size. This is a bounce strategy where we are looking to buy at support and sell at resistance, not trade the support or resistance breakout. So for this reason, learning how to identify the loss in momentum is critical. Get this portion wrong and the strategy won't work. So pay close attention. Don't worry, I will explain the concept to you shortly and show you a couple of examples, so keep watching. Here's an example of this strategy. Step number 1. Identify key levels given by swing points. Step number 2. Look for candles that get smaller and smaller as price approaches the key level. And step number 3. Wait for a candlestick pattern as your entry trigger. Now let's take a look at an example. Here we have the pound dollar and a key level given by the swing point over here. If you struggle with identifying key levels, switch over to the line chart and look for the most obvious swing points. As price approaches the level, we see that the candles are getting smaller and smaller. This is crucial because it shows that price is losing momentum and slowing down. Remember, we are interested in trading the bounce of the level, so a loss in momentum going into key level is definitely a must. This is mandatory and you should never enter a trade if you do not spot this. This step is very critical, so pay close attention and rewatch it if you must. In this example, we see a long wick rejecting the key level as well. And when price forms a bullish engulfing candlestick pattern, that will be our entry. In this case, it is an engulfing candlestick pattern. But any other candlestick patterns such as the piercing pattern or pin bar will work fine as well. Let's take a look at another example. In this case, the Aussie dollar. It should be quite clear that this is a strong resistance, and so that would be our key level. Watch how price approaches the resistance level. We see a big candle, then a small candle, and then an even smaller candle. This is how momentum loss looks like. You want to see the candles becoming smaller and the candles range tightening up. We also see that this very nice long rejection candle that further confirms that sellers are pushing back and the resistance is valid. Upon seeing this candle, we can go ahead to take the trade and set the stop loss at the high with a buffer. Now, I want to spend some time talking about the psychology behind this strategy. We have a big candle followed by a couple of small candles before price reverses off the key level. The big candle represents emotional buying into a level. because price isn't rally in a structured manner. So people who bought are people who were fearful of missing out, not so much professional traders who have been quietly accumulating their positions at a key level. The small candles represent profit taking into the level. So buyers who previously bought are now becoming sellers, and they put in their sell orders to close their positions with a profit. This causes the upward momentum to slow down. And once these buyers are out, price then bounces off the level. By trading this strategy, you are looking to sell to people who previously bought. So you have the key level and exiting traders supporting your trade. Let me show you a couple of examples more before highlighting the most common pitfall traders make. So keep watching. Here's the dollar-yen chart, and we have a key resistance level. Watch how price approaches the key level. We have a big candle followed by a smaller candle followed by an even smaller candle, and then finally an engulfing bar that gives us our entry. Here's the dollar CAD, and we observe the same pattern. Price approaches the key support with candles that get smaller and smaller. Observe what happens to price afterward. A quick tip I have for you is to look for a change in candle color. That is one of the most obvious signs that momentum is slowing down. In this example, we see 3 red candles in a row before a green candle finally appears at support. This is not mandatory for this strategy, but it is just a quick way to help you identify momentum loss. Now, I want to show you the common pitfall that most traders make when trading a pure price action trading strategy like this, and that is trading every single key level without considering if there's a loss in momentum. I've previously touched on this at the start of this video, but let me show you a couple of examples to drive home the point. This is the Aussie Yen chart, and if you look at the historical levels, you will easily identify this key resistance level. Watch how price approaches the key level. We have a small candle followed by a big candle into the key level. This shows that price is approaching the level with momentum, and thus it is more likely that this level will break. There's also no price action reversal signs. Here's another example of price approaching the level without showing any signs of momentum loss. And another example of price just charging through a key level over here. Hopefully you are convinced that learning how to read momentum loss is very important if you want to trade a pure price action trade strategy. If this sounds too hard for you and you prefer to stick to an indicator-based strategy, then I recommend that you check out my Hidden Ashi trading strategy video, which I will link at the top right of this video. Here's a quick recap of this pure price action trading strategy. Step number 1, identify key levels given by swing points. Step number 2, look for candles that get smaller and smaller as price approaches the key level. And step number 3, wait for a candlestick pattern as your entry trigger. And that's all I have for you in this video. I hope you got value. Remember to like this video, subscribe to the channel, and comment with the emoji plus win Forex signals to enter yourself into our giveaway. The winner will be announced in the next video, so turn on the notification bell and check to see if you have won. I will leave the link to the Hidden Ashi trading strategy video here, so go ahead to watch that if you find that this strategy is too complicated for you. Thanks for watching. I will catch you in the next video.